Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for this subject, Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 5, that is Concept and Accounting of Depreciation. All the concepts will be covered in the coming series of lectures. So let us begin. This is lecture number 10. This is lecture number 10. Let us continue with NVT method. Write an illustration. A lease. A lease is purchased. A lease is purchased on 1st April 1st April 2014 for 4 years. For 4 years at a cost of at a cost of at a cost of rupee 40,000. Rupee 40,000. It is proposed it is proposed it is proposed to depreciate it is proposed to depreciate the lease depreciate it is proposed to depreciate the lease by by the annuity method by the annuity method by the annuity method charging interest charging interest charging interest at the rate 5% per annum 5% per annum. A reference to the annuity table to the annuity table a reference to the annuity table shows that a reference to the annuity table shows that to to depreciate rupee 1 rupee 1 by annuity method by annuity method by annuity method over 4 years over 4 years charging interest charging interest charging interest at the rate 5% per annum at the rate 5% per annum. One one must write off one must write off a sum of rupee 0.2820 0.2820. What is required? Show the lease account show the lease account show the lease account for 4 financial years for 4 financial years for 4 financial years and also the relevant entries the relevant entries the relevant entries in the profit and loss account in the profit and loss account in the profit and loss account Kindly see the question once more quickly. A lease is purchased on 1st April 2014 for 4 years at a cost of 40,000 rupees. It is proposed to depreciate the lease by an annuity method by charging the interest at the rate 5% per annum. A reference to the annuity table shows that to depreciate 1 rupee by annuity method over 4 years, charging interest at the rate 5% per annum, one must write off a sum of 0.2820 in terms of 1 rupee, shows the lease account for 4 financial years, and also the relevant entries in the profit and loss account. I believe it is clear. I believe it is clear. Let us try to solve it. Let us try to solve it. Solution. Solution. Let us draw lease account. Lease account. Lease account. The format of account remains the same. The format of account remains the same. Draw along with me. Debit, credit. Date, particulars, amount. Date, particulars, amount. So date, particulars, amount, date, particulars, amount, date, particulars, amount in rupee, date, particulars, amount in rupee. On 1st of April 2014, on 1st of April 2014, a machinery is purchased, a lease is purchased. Lease is purchased for 40,000. Lease is purchased for 40,000. Lease account to be debited, bank account to be credited. So to bank account, lease purchased to bank account for 40,000. For 40,000 the lease is purchased. Go to the question. It is proposed to depreciate the lease. It is proposed to depreciate the lease by an annuity method charging interest at the rate 5% per annum. This is also a cost, 5% per annum. So at the year end, that is 31st of March 2015, to interest account 5%. So 40,000 multiplied by 5%, which is 2,000, which is 2,000. I believe it is clear, which is 2,000. Quickly do totals. Quickly do the total, that is 42,000. 42,000. 42,000. Same year end. Same year end, 31st of March 2015, by depreciation, by depreciation, by depreciation, 40,000, 40,000 multiplied by 0.2820, just see it from here, 0.2820 for 1 rupee, 0.2820, so 40,000, 40,000 multiplied by 0.2820 for 40,000, 40,000 multiplied by 0.2820. Do it on your calculators quickly. Do it on your calculators quickly. 40,000 multiplied by 0.2820, 11,280. It is 11,280. 42,000 minus 11,280. 42,000 minus 11,280. The balance is 30720. The balance is 30720. By balance carried down. By balance carried down 30720. I believe it is clear to all of you. By balance carried down 30720. Next year, 1st of April 2015. Next year, 1st of April 2015. To balance brought down the same amount, 30720. 30720. Interest is charged. Interest is charged at the year end. Interest is charged at the rate 5% to interest account. To interest account at the rate 5%. 30720 multiplied by 5%. 30720 multiplied by 5%, which is, do it on your calculator. 30720 multiplied by 5%. 1536. 1536. Do the totals quickly. Do the totals. 32256. Totals 32256. The totals is 32256. At the year end, that is 31st of March 2016. 31st of March 2016. We'll calculate the depreciation amount. We will calculate the depreciation amount. So depreciation amount would be same, 40,000 multiplied by 0.2820. Depreciation amount would be same, 40,000 multiplied by 0.2820. So this would be 11,280. 11,280. So 32,256 minus 11,280. Do it on your calculator quickly. Do it on your calculators quickly. So it is 20976. 20976 by balance carried down. By balance carried down. I believe it is clear to all of you. I believe it is clear. Let us move ahead. Let us move ahead. Stretch these lines. Stretch these lines. Stretch these lines. Write opening balance over here. 20976 is the opening balance. 1st of April 2016. To balance brought down. To balance brought down 20,976 at the year end. 31st of March 2017. Interest is to be charged to interest account. To interest account. 20976 multiplied by 5%. 20976 multiplied by 5%. Multiplied by 5%. It is 1048. 1048. It is 1048. Do the totals quickly. Do the totals. 20976 plus 1048 is 22024. 22024. Credit side total 22024. Credit side total 22024. At the year end 31st of March 2017, depreciation needs to be charged. So by depreciation account, same 40,000 multiplied by 0.2820, 11,280. 11,280. So 22024 minus 11,280 is 10744. 10744. This would be by balance carried down. This would be by balance carried down. Fourth year. Fourth year. Year 2017. 1st of April 2017. To balance. To balance brought down 10744. To balance brought down 10744. 31st of March 2018. 31st of March 2018. To interest account. To interest account 10744 multiplied by 5%, multiplied by 5%, which comes to 536, which comes to 536. Totals 11280. 11280 is the total. 31st of March 2018. By depreciation. By depreciation account, the depreciation would be same, 40,000 multiplied by 0.2820, which comes to 11280, which comes to 11280. No balancing figure. No balancing figure. The lease is depreciated fully during 4 years. The lease is depreciated fully during 4 years. Let us prepare profit and loss account now. Let us prepare profit and loss account. Prepare an extract. So an extract of profit and loss account. Profit and loss account. An extract of profit and loss account we need to prepare. Format of account. Draw the format of account. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Debit, credit. 31st of March 2015. 31st of March 2015 to depreciation. To depreciation. 31st of March 2015 to depreciation account. It will come 11,280 over here. 11,280. For the all the 4 years, the depreciation amount would be the same because it is annuity method. The interest amount will be different. So 31st of March 2015 by interest. By interest account, by interest account 2000. By interest account 2000. Next is 31st March 2016 to depreciation account, to depreciation account, to depreciation account 11,280. 11,280. 31st March 2060 by interest account, by interest account 1536. 1536. Third year 31st March 2017 to depreciation account, to depreciation account, to depreciation account, to depreciation account 11,280. 31st of March 2016 by interest account, by interest account, third year interest which is 1048, third year interest which is 1048, and at last 31st of March 2018 to depreciation account, to depreciation account 11280, 11280, 31st of March 2018, 31st of March 2018, it would be by interest account, by interest account, the interest is reducing, so it is 536. The interest amount is reducing, so it is 536. Now let us quickly close this account. This account is closed. So over here we have completed this question, this illustration on the basis of annuity method. We have done the lease accounting. We had made a lease account properly. Then we shifted to the extract of profit and loss account. Is it clear to all of you? I believe it is clear. Let us continue. Let us continue. Let us continue. Write a new illustration. Write a new illustration. Illustration. Write a new illustration on the basis of previous example. So, taking the same information, taking the same information as given in previous illustration, as given in previous illustration, as given in previous illustration, along with the fact that rupee 4000 would also be refunded. Rupee 4000 would also be refunded after 4 years. After 4 years. Show the lease account. Show the lease account. Show the lease account. Let us try to solve this. Let us try to solve it. Right, solution. Solution. In this question, the annual charge of depreciation needs to be calculated. The annual charge for depreciation needs to be calculated for every year. So let us calculate first the annual depreciation charge, and after that we'll be able to make lease account. Right, calculation of annual depreciation charge. Annual depreciation charge. Calculation of annual depreciation charge. Cost of lease paid. Cost of lease paid rupee 40,000. Cost of lease paid is 40,000. The refundable amount is 4,000. So less refundable amount 4,000 needs to be refunded. So refundable amount is 4,000. That means the depreciable amount is 36,000 only. The depreciable amount is 36,000 only. Depreciable amount depreciable amount is 36,000. Depreciable amount is 36,000. Annuity factor is given in the question. Annuity factor is given in the question at the rate 5%, at the rate 5% interest for 4 years. 5% interest for 4 years needs to be calculated, which is 0.2820, which is 0.2820. So 36,000 multiplied by 0.2820, 36,000 multiplied by 0.2820, which will give us the figure 10,142. 10142. 10142. This is fixed depreciation charge. This is fixed depreciation charge. Fixed depreciation charge 10142. Now interest is also charged at the rate 5%. So interest on salvage at the rate 5% on rupee 2000, on rupee 2000 for a year. So 5% of 2000 is 5% of 2000 for a year. So interest on salvage at the rate 5%. Students, it is not 2000, it is 4000. 4000 every year. 4000 multiplied by 5% is 200. 4,000 multiplied by 5% is 200. So 10142 plus interest. Interest needs to be added. So this comes to 10352. 10352. This is annual depreciation charge. Annual depreciation charge. Annual depreciation charge 10352. I believe you understood. Let us make lease account now. Because we have calculated the annual depreciation charge, we can make lease account now. Lease account. Lease account. Lease account. Let's draw the format of account. Date, particulars, amount. 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 debit, credit, debit, credit, debit, credit. On 1st of April 2014, lease is purchased to bank account lease 40,000. Lease is purchased to bank account lease is 40,000. On the year end 31st March 2015, we need to charge interest at the rate 5% on this amount. So true interest account 40,000 multiplied by 5%, which is 2,000, which is 2,000. Close this quickly. 42,000. 42,000. Charge depreciation for the year. So 31st March 2015 by depreciation. 31st March 2015 by depreciation account. By depreciation account, we have calculated the annual charge of depreciation 10352. In the working note, we have calculated the annual charge of depreciation, which is 10352. 10352 we have calculated. Let's move ahead. Let's move ahead. By balance carried down. By balance carried down. 42,000 minus 10352. So 31,648. 31,648. This would become the opening figure 31,648. Two balance brought down. Two balance brought down. The date would be 1/4/2015. The date would be 1st April 2015. Now, on the closing date 31st March 2016, charge interest to interest account. Charge interest to interest account 31,648 multiplied by 31,648 multiplied by 5%. Quickly do it on your calculators. 31,648 multiplied by 5%. 1,582. 1,582. 1,582. Quickly do the totals. 31648 plus 1,582. 33230. 33230. On the closing date 31st of March 2016, by depreciation. By depreciation account. By depreciation account 10352. 10352. 33230 minus 10352. Balancing figure. Quickly calculate. By balance carried down. By balance carried down. The balance is 22878. The balance is 22,878. The balance is 22,200 and 878. Let us continue. Let us continue. Stretch these lines a bit. Stretch these lines. 1st April 2016 to balance brought down. 1st April 2016 to balance brought down 22878. 22878. We need to calculate interest on this figure. So 31st of March 2017 to interest account 22878 multiplied by 5%. 22878 multiplied by 5%, which comes to 1144, which comes to 1144. Let us do the totals. 24022. Let us do the totals. 24022. 24,022. 24,022. Year end 31st March 2017 by depreciation account, by depreciation account 10352. 10352, this is the depreciation amount. By balance carried down, by balance carried down, the balancing figure 24,022 minus 10,352, 13,670, 13670. Stretch these lines a bit. This is the fourth year, the closing year. Fourth year, this is the closing year. Just opening balance over here, 1st of April 2017. To balance brought down 13670. We need to charge interest on this amount. So to interest account 13670. This needs to be charged at the rate 5%. 5%, which is 684. 684. Now 31st of March 2017. 31st of March 2018 over here also. 31st of March 2018 to interest account 684, and depreciation is calculated on 31st of March 2018, that is year end. By depreciation, by depreciation account, the amount of depreciation will be same 10354. Let us do the totals quickly. On debit side 13,670 plus 684. 14,354. 14354. 14354. 14354. I believe you understood. 14354. Reduce the amount of depreciation. What you receive at last is this money you need to refund. So by bank account. By bank account 4,000. By bank account 4,000. In the question it was given that 4,000 would also be refunded after 4 years. In the question it is given that 4,000 is also refunded after 4 years. Show lease account. So as you can see over here, this 4,000 is refunded after 4 years. This 4,000 is refunded after 4 years. And how we have calculated the annual depreciation charge? Cost of lease is 40,000. Refundable amount we have reduced. Depreciable amount is 4,000, 36,000. We have calculated depreciation on the basis of 36,000 only. Now the whole depreciation is charged, and at last 4,000 is remaining. This is to be refunded. So by bank account 4,000. By bank account 4,000. So let us continue now. Let us continue. We'll be solving illustration 4 now. We'll be doing illustration 4. A lease is purchased on 1st April 2012 for 4 years at a cost of 2 lakhs. 4 years and the cost of lease is 2 lakhs. The lease is purchased for 2 lakhs. It is proposed to depreciate lease by an annuity method charging 5% interest. A reference to the annuity table shows that to depreciate rupee 1 by annuity method over 4 years charging 5% interest, one must write off as a sum of 0.282012. 0.282012. To write off 2 lakhs, one has to write off every year 56,402.40, that is 2 lakhs multiplied by 0.282012. What needs to be done? What is required in the question? Show the lease account for 4 years and also the relevant entries in profit and loss account. We need to show the lease account for 4 years and relevant entries in the profit and loss account. Let us try to solve it. Solution. Let us try to solve it. Solution. Draw lease account first. Lease account. Lease account. Lease account. Date. Particulars. Amount. Date. Particulars. Amount. Debit and credit. So date, particulars, amount, and date, particulars, amount. Amount would be in rupee form. So date, particulars, amount. Let us begin. Let us begin on 1st April 2012. On 1st April 2012, a lease is purchased for 2 lakhs. So to bank account, 2 lakhs. To bank account 2 lakhs. In the question it is given that an interest of 5% needs to be charged for 4 years. So at the year end 31st March 2013, to interest account. To interest account 2 lakhs multiplied by 5%. 2 lakhs multiplied by 5%, which is 10,000. Which is 10,000. So 2 lakh 10,000. 2 lakh 10,000. The total is 2 lakh 10,000. 2 lakh 10,000. On the year end, that is 31st of March 2013, by depreciation, we needs to charge depreciation over here. So by depreciation account, depreciation is given in the question, which is 56,402.4. So 56,402.4. How come? 2 lakhs multiplied by 0.282012. 0.282012. Let us calculate the balancing figure. By balance carried down. By balance carried down, 2 lakh 10,000 multiplied by 56,402 minus 56,402.40. Do it on your calculators fast. Do it on your calculators fast. 153,597.60. 153,597.60. Take it this amount over here as a opening balance. 153,597.60 opening balance. So 1st of April 2013, two balance brought down. Two balance brought down. Two balance brought down. Calculate interest at the rate 5% on closing date 31st of March 2014 to interest account. To interest account 153,597.60 multiplied by 5%. Multiplied by 5%. 153,597.60 multiplied by 5%. 7679.88. 7679.88. Let us do the totals first. Let us do the totals first. 161,277.48. 161,277.48. On the closing date, calculate the depreciation on the closing date 56,402.40, which is given in the question. 56,402.40, which is given in the question. By balance carried down. By balance carried down. By balance carried down 104,875.08. 104,875.08. Stretch these lines. Will make lease account for third year now. Opening balance 104,875.08. Opening balance. So two balance brought down. Two balance brought down. Opening date. Opening date 1st April 2014. 1st April 2014. On closing date 31st March 2015, we need to charge interest on this amount at the rate 5%. So 104875.08 multiplied by 5%. Multiplied by 5%, which is 52, which is 5243.75. 5243.75. Close it for third year. Close it for third year 110118.83. 110118.83. Charge depreciation for the whole year 31st of March 2015 by depreciation. By depreciation account is given in the question 56402.40. 56402.40. On 31st March 2015, what would be the closing balance? So by balance carried down. By balance carried down 53,716.43. 53716.43. Let us do the accounting for fourth year, the lease account. Let us stretch these lines. Stretch these lines. Let's write opening balance over here. 53716.43 opening balance. Two balance brought down. This would be two balance brought down 1st of April 2015. 1st of April 2015, two balance brought down 53716.43. We need to charge interest on this amount at the rate 5% to interest account 53716.43 multiplied by 5%. Multiplied by 5% on the closing date 31st March 2016. On the closing date 31st March 2016, do it on your calculators. 53716.43 multiplied by 5%, 2685.82. 2685.82. 2685.82. Let us do the totals. Let us do the total. 53716.43 plus 2685.82, which is 56402.25. 56402.25. On the closing date, we need to charge depreciation. So 31st of March 2016, by depreciation. By depreciation. By depreciation account, which is given 56402.25. 56402.25. So the asset is fully depreciated. The lease is fully depreciated. 56402.25. Let us continue. Let us continue and make profit and loss account now. We have already made lease account for 4 years. Now let us account for profit and loss account. Let us make profit and loss account now. Profit and loss account. Profit and loss account. Draw the format along with me. Draw the format along with me. Debit, credit. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount in rupee. On the left side, on the right side, date, particulars and amount. Particulars and amount. Let us begin. Let us begin profit and loss account. So on 31st March 2013, on 31st March 2013, charge this depreciation to, transfer the depreciation to profit and loss account. So to depreciation account 56,402.40. 56,402.40. So this amount of depreciation would be same for the all 4 years, 2013, 14, 15, 16. This amount of depreciation will be same. Let us charge the interest to profit and loss account. So 31st March 2013, by interest account, by interest account. What is the interest in the first year? 10,000. For 2012-13, the interest is 10,000. by interest 10,000, by interest 10,000. So this extract of profit and loss account is closed here. Now for 2013-14, so 31st March 2014, 31st March 2014, to depreciation account, to depreciation account. The depreciation will be same 56,402.40, 56,402.40, 56,402.40. Charge for interest. So by interest, transfer the interest over here by interest. Closing date 31st March 2014. Closing date 31st March 2014. By interest 7679.88, 7679.88, 7679.88. Let's charge for 2015, year 31st March 2015, to depreciation, to depreciation. This depreciation is already calculated in the question, 56,402.40, 56,402.40. Transfer the interest amount in profit and loss account 31st March 2015 by interest, by interest account, by interest account 5243.75, 5243.75. Let us close it over here. For 2016, 31st March 2016, to depreciation, to depreciation account. The depreciation will be same, 56,402.40, 56,402.40 on closing. So 31st March 2016, by interest account. We need to transfer the interest to profit and loss account. So by interest account 2685.82, 2685.82. And over here the extract of profit and loss account is closed over here. The extract of profit and loss account is closed over here. Extract of profit and loss account. I believe you understood the profit and loss account properly. So let us see what we have done in today's class. Let us quickly see what we have done in today's class. So we have done an exhaustive illustration, a comprehensive illustration where we have prepared a lease account. We have learned how to do the lease accounting. Basically, we have learned how to solve the annuity method of depreciation. So the amount of depreciation is same in the annuity method, and we have accordingly learned how to make lease account. And after that, we have also understood how to transfer the amount of depreciation and how to charge the interest in the profit and loss account. We have solved one more illustration in relation to lease account, in which this was a bit unique one, because the 4,000, the rupee 4,000 would also be refunded after 4 years. So 4,000 is refunded after 4 years. And then we have done this illustration where we need to prepare lease account as well as the extract of profit and loss account for 4 years. We have done it properly. I believe you must have understood till annuity method. We'll be continuing with a new method in the next class. We are stopping here. We are stopping here. Thank you. Thank you.